So Nike just came out with let's call it a messy earnings report. I mean, there were some serious red flags in there. But the market loved it. It cheered. So what on earth did investors see that the rest of us might have missed? That's what we're going to dig into. We're breaking down Nike's Q1 results to see if this is really the start of a turnaround.
And when I say the market cheered, I mean it. Check this out. The stock jumped over 6% in the very next trading session. Now that is a big move. It tells you that investors didn't just shrug off the bad news, they saw something genuinely positive, something strong enough to overlook some pretty glaring issues in the report. And that, right there, is the big question we're tackling. I mean, you look at their guidance for the next quarter, it's weak. You see their margins getting squeezed, hard. So where did all this optimism come from? What's the story here? Let's get into it. Let's unpack the numbers and what management is saying.
All right, so diving into the quarter, it's really like we're looking at a tale of two Nikes. Seriously. On one side, you've got these awesome signs of progress, real momentum building in key areas. But on the other side, well, you've got these stubborn weaknesses that just keep dragging things down.
And you know, the CEO Elliott Hill, he basically came out and said as much. This quote really nails it. He's essentially telling everyone, look, this isn't going to be a smooth, straight line back to the top. He's managing expectations, but he's also making it crystal clear. We know where we're going and we're on our way.
Okay, let's look at the headline numbers, because this is where you really see that contradiction play out. They absolutely crushed it on earnings and revenue. I mean, earnings per share came in at 49 cents when the street was only looking for 27. That's a huge beat. Revenue also beat expectations. But then, bam, you look at the gross margin. It's down 320 basis points. That's a 3.2 percentage point drop year over year. That's massive. And it's being driven by things like discounts and, as we'll see, some pretty nasty tariffs.
So let's talk about the good stuff first, the wins. And there were some big ones. Remember how much trouble their wholesale channel was in? Well, it bounced back, up 7%. That's huge. The all-important North American market, up 4%. And get this, the running category was just on fire, growing over 20%. This is exactly what management meant by their win now strategy. It looks like it's actually starting to work.
But, and this is a big but, here's the other side of the coin. Nike's own direct-to-consumer business, their own stores and website, the really profitable part, was down 4%. And their digital sales, just online, fell off a cliff, down a staggering 12%. And on top of that, Greater China, which is supposed to be this huge growth engine for them, is still struggling, down 10%. This is the stuff that's really weighing the whole company down.
So, the big question is, how are they going to fix this? What's the plan? Well, management has this whole new strategy they're calling the sport offense. Think of it as their official comeback playbook. And honestly, this is what investors are really betting on right now. So what is this sport offense? Well, in a nutshell, it's a huge internal shakeup. They're ditching the old way of organizing by men's, women's, and kids. Instead, they're rebuilding the company around specific sports. The whole idea is to get faster, get closer to the athletes, and innovate like crazy. It's really about getting Nike back to being, well, Nike. And they've already got a proof of concept that this can work. Just look at what they did with the running category. That 20% plus growth didn't just happen by accident. They went deep on what runners wanted, they redesigned classic shoes like the Vomero and Pegasus, and they just pushed innovation relentlessly. And now the plan is simple. Take that exact playbook and run it in their other big sports categories. And it's not just about what's happening inside the company. They're making some smart moves on the outside, too. They're fixing relationships with big partners like Dick's and Nordstrom. They're doing cool new collaborations, like one with Skims, to reach a totally new crowd. And they're loading up the product pipeline for the next few quarters, especially in football. So they're attacking this from all angles. Okay, so that's the comeback plan. And it sounds pretty good, right? But here's where we need to pump the brakes a little. Management was super cautious about the next few months, and it really boils down to two big problems: their own guidance and these massive tariff headwinds.
Yeah, just look at this comparison. It tells you everything you need to know. In Q1, they managed to grow revenue by 1%. For Q2, they're telling us to expect revenue to actually go down by a few percent. And remember that big hit to margins? They think it's going to get even worse next quarter. This is the stuff that had people really nervous before the call.
And a huge reason for that margin pressure is this number right here, $1.5 billion. That is what Nike now thinks tariffs are going to cost them over a full year. To put that in perspective, that estimate jumped by $500 million in just the last 3 months. That is a gigantic, unexpected bill that's hitting their bottom line.
And this isn't just us guessing. The CFO, Matt Friend, said it point blank on the call. He said, "We've had to lower our margin outlook for the whole year. And the reason is these new tariffs. It's a huge external problem that they can't really control, and it makes this whole turnaround story a lot more complicated."
Okay, let's pull all this together. We've got a messy quarter, for sure. But there are some definite green shoots, signs that the turnaround plan is working. But all of that is being overshadowed by these really big headwinds in the short term. So what's our final take? What are we looking for in the next call?
Here's what you need to be watching. Number 1, margins. Can they stop the bleeding in Q2? Also, keep an eye on any news about tariffs. If those ease up, it would be a massive boost for the stock. We'll also be watching to see how well their new football products sell. And of course, the 2 big problem areas, Greater China and their digital sales. We need to see some sign of life there.
So when you weigh all that, the potential good news against the very real bad news, we're calling it right down the middle. We're initiating our rating on Nike as market perform.
And the thinking here is pretty simple. We really like the direction they're heading. The sport offense strategy seems legit, and we're seeing early signs that it's working. But you just can't ignore the headwinds. The tariff situation is brutal for their margins right now, and the problems in China and their own direct sales channels are still very real. It just feels like the risks and the potential rewards are pretty balanced at this price.
All right, finally, let's talk about a potential trade idea. And this one's interesting. We're looking at something like a long call spread, basically a bullish bet, that pays off after their next earnings report. Here's the thinking. Management was so cautious this quarter, it feels like they've priced in the absolute worst-case scenario on tariffs. So if anything goes even slightly better than that horrible forecast, if margins just stabilize, or if China shows any sign of bottoming out, the market could reward them in a big way. It feels like the downside is priced in, but the upside isn't.
So, there you have it. The market was happy this time around, but the real test for Nike is still to come. The question is, can their new sport offense playbook move fast enough to outrun some pretty major headwinds? That's what we'll be watching. That's our take on Nike, and as always, please remember, this is not financial advice.